All right, guys. So in this video, I want to cover another moving average strategy, and that's the combining the 200 simple moving average with the 200 exponential moving average. This gives you an idea of what the order flow is in the market and how to anticipate the order flow, uh, anticipate a change in the order flow. And essentially, I have the 200 exponential um, marked off in yellow and the 200 simple moving average marked off in blue. And essentially, the important distinction here to notice is that the exponential moving average is more reactive to price. So it's going, if there's a shift in order flow to the upside, what you'll see is the exponential will pick up on that before the simple, and you'll see the exponential crawl above the simple moving average, or vice versa. If the order flow starts picking up to the downside, you'll see an exponential moving average. Uh, the yellow 200 exponential move below the slower blue 200 simple moving average. In Bitcoin's history, it's actually never done that on the weekly. It's always maintained above it. Um, so I guess we need to go down to a 3-day chart to see any. So here you see. So here the 3-day faster moving average, the 200 creep below the slower the here, and then you get price compressed down here, and then you see the volatility pick up. And so it was a good indicator. Here, it told you the right story that, order flow is picking up to the downside. And ultimately, that is what we saw. Let's see if we got another signal down here. Again, it never really crossed here. Crossed here briefly to the upside. So here you got price comes down, retests this cross, but ultimately you get the exponential flowing above the slower simple, and that's telling you that order flow, at least at the time before the COVID crash, was going to the upside, and that's what you saw. Price ran to the upside. Here again, this one was beautiful, right here. So essentially you have this bear market move in Bitcoin, 2018, right, lower highs, and then it gets to this very low liquidity consolidation right here. Liquidity is drawing away from the market on a macro time frame, and the order flow is changing, and you can see that here. Right? The faster exponential that's more sensitive to order flow is picking up on that, and it's crossing below this slower 200. Again, here same signal here, right? The bear market. So this is beautiful right here. Yeah, price comes up, retests it during the bear market, gets you that last capitulation leg, and then when it reclaims it to the upside, that told the story of the coming parabolic move. Again, it's just telling you what the order flow is. Another way to put it is there's no way to change the order flow without changing the relationship of these moving averages. It's one of those things where, like, when the big players enter the market, there's certain signatures in the market that they can't hide, right? When you're operating with a certain size, you leave footprints in the market, and kind of our job as technical analysts is to pick up on those footprints and see what they mean. So right here, this may not have been the best signal, right? Because you only get the cross down at the very low. So I would interpret that as not a great signal. Again, here, it's not a great signal as well. You get the cross, but then, so you do get tradable reactions when price comes down into the cross. But I would have to say it's not as actionable on the daily here. It is pretty actionable here. So price, you get your cross. But do you really need to? Do you need it to tell you that the order flows to the downside after you see a move like this? I don't know. So yeah, while it was beautiful on the 3-day, absolutely calling the move perfectly on the 3-day. Here it obviously gives you a signal right there. Again, this would have been a signal here before the pump. But it does really look like the 3-day is more optimal for this. Actually, the time frame that I've used this extensively on is the 4-hour. Never above the 4 hours. So this is actually the first time back testing. I'll have to implement it on the 3-day going forward. But yeah, it's really the bread and butter for this strategy is on the 4-hour, right? When the slower moving period crosses below. See this test up there. Get the sell off. The higher crosses above the slower. You get a move up. This is like a consolidation range. So um, again, going back to the context of the market, you don't want to be trading exponential moving average strategies or any moving average strategy during a consolidation in the market. It's just going to give you false reads. This price oscillates within the consolidation. I can mark that off. But when price is trending, that's when you get your good signals. Right here again, so price is making all-time highs here. But as price is making an all-time high here, you see the exponential moving average, the faster moving average 200 cross below the slow 200. And it's telling you, the order flow is changing to the downside. And ultimately, that's what you see. It gives you a good read here to the upside. Great read here. Just almost like a crystal ball on the 4-hour. Again, this might have been a false read, but the daily, if you remember the daily, it gave the opposite read. Higher time frames take over lower time frames. Here, you don't really have much reads. Here, you get the lower period crossing below the higher period. And it is picking up on the change in order flow. But, this distribution went on pretty significantly. So it caught it a little bit early. So this might be a situation where, if you're right early, you may not, price is still extending pretty far. So it's really not until the break of structure here that you want to start playing that. Again, in parabolic rallies, you're not going to get many signals. Here's the signal here, price turned around. You can see the shift in order flow after this sell-off, and that was the beginning of the parabolic leg. Also the area where, KYC was getting sent out for exchanges. All exchanges were getting notices that they need to be KYC'd or be regulated. So a healthy dose of FUD before a parabolic rally. That's the way the market works. Here, this gave you a great signal here. So the lower or faster periods crossing below the lower. Again, it's not a signal to enter there, but it's a signal that, the market's turning around. Maybe it retraces into 618, then the order flow takes over. So you can still get runs above to capture liquidity, but it's important to understand that the capturing of liquidity is in the context of sell side order flow. Same thing here. You get, slowdown in price as price consolidates, moves towards the edge, breaks above, and then the moving averages are, telling you which direction price is moving. And it's pretty simple. Again, this is a little bit of a momentum strategy. Gives you an idea of order flow. And order flow is really important to understand in the market because, it'll help you avoid getting caught on the wrong side of the trade, which is never fun, right? You never want to be standing in the market like a deer in the headlights. I'm sure we've all been there, but any strategies you can implement to avoid that, to make sure you're on the right side of the market. And really the best way to do that is to understand order flow. So you incorporate different strategies that, understand that tell you the shift in order flow in the market before you might necessarily realize it in price. Anyway, I hope you guys found this video interesting. Please make sure to subscribe to the channel, and I'll catch you guys later.